go ahead and show my screen. Hey everybody, happy Monday. Nice to be with everybody. If you're out there typing a wire, yes, if you can see my chart, hear my voice. Shaim, good afternoon. Nice to see you. Joe, good afternoon. All right, everybody tuning in live. Nice to see everybody. All right. Okay, I have on the chart, we're going to have a pretty short and sweet session today. I'm going to focus primarily on stocks today. We continue to see this pull, this kind of tug of war between what the stock markets are wanting to do, what they're trying to do, and I'll kind of explain that as we go along in today's session. So Denise, nice to be with you. Good afternoon. Let's see here. Eyes from the sky. Good afternoon, TJ. Good afternoon. Joe's in the house. Raj is here. Nice to see everybody. All right, perfect. So if you have, first off, let me ask, how many of you out there that are tuning in today, even if you're watching this after the fact, you're watching the recording, how many of you are actively trading stocks? Or if you're not super active, like, week in, week out, or month in, month out, do you still have a stock portfolio? Do you trade stocks and options? I am just curious. Tyson and myself are very curious because we are going to be spending a lot more time in the coming weeks working with traders on stocks and options. And I'm excited to, add a little bit more activity to my overall portfolio and, do it with an awesome community and not necessarily do it alone. So that's a good thing, brainstorming with like-minded traders. So if you're out there and you're trading stocks, if you would like to learn how to trade stocks more effectively, if you're liking, if you want to kind of add to your arsenal of the ways to profit from stocks, as everything is pretty darn exciting in the stock market right now. And, to learn a little bit more on how to trade stocks and options. So whether the market goes up, down, or sideways, we have strategies that allow us to capitalize on profit opportunities. So when it comes to, the major indices right now, here is my overall consensus. All right, the SPY, we can look at the diamonds, we can look at the Qs. Look, the market right now does not really want to drop. So let's talk about this. I think this is important to kind of lay this out there for what's happening right now in the stock market. So 2021 stock market outlook. All right. So again, this is all opinion based. You understand there's risk in trading, and throw on the risk disclaimer here. We understand there's risk in trading. You know the deal. Everything's for educational purposes only. Okay. But my stock outlook, my market outlook as a real trader, a real investor is this. Okay. The stock market doesn't want to drop. Okay. It doesn't want to correct. It doesn't want to fail. Okay, and the reason why this is important to see right now is, number one, we had probably one of the greatest years in stocks that I have probably ever seen in my entire career in 2020. Like, everything was just ballistic and gangbusters. And what you hopefully capitalized on in 2020 had a little bit of continuation into early 2021. But then we also are starting to notice this shift from growth into value. And so, in fact, on my personal YouTube channel, which is youtube.com/Chris Pulver, I run these weekly outlooks and weekly recap sessions. And we've been talking about this the last couple of weeks, like value into growth, or actually vice versa, growth into value. So what I mean by that is right now, the stock market doesn't want to drop, correct, or fail because it's the only real yield in town, right? Bonds are offering less than 1%, okay? Interest rates are less than 1%, okay? I mean, Forex is currency pairs. You're basically trading country to country, currency to currency, but it's a race to the bottom. Right now in equities, okay, offering less than 1% for the most part. QE and loose monetary policy. And when I say loose monetary policy, I mean accommodative interest rates, and low interest rates. Okay, so essentially cash is dead, right? I mean, cash is not going to make you any money. Cash is safe, right? Cash is safe, but if you can't at least produce 2.5% to 3% a year to at least stay up with inflation or outpace inflation, you're not going to make any money. So even being safe right now, it's like savers are getting crushed. They're kind of flooding into riskier assets. There's stimulus money, right? We know that there's, even though it is advised and encouraged, like, don't take your stimulus check and throw it in the stock market, people are doing it. And there's fresh money coming in the stock market every single day. Okay. Stimulus money making its way into markets, right? So look, people hear this all the time. Get your money to make money for you. That is what investing is. That is what compounding wealth is all about. Okay, to do this, you have to play the game. And right now, one of the best games in town is to trade stocks. The best game in town is to be a trader, right? It is legitimately the best side hustle in the world, with tons of potential. And if you do it the right way, learn some basic bread and butter strategies, we can do a lot of great things, and we can outpace the market. We can make money whether the market's going up, down, or sideways. And this is all really important stuff for building wealth. This is great stuff for either offsetting your salary, replacing your salary, providing retirement income, living off of dividends, wherever you are at in your spectrum of what type of trader you are. These are all important things. And so my outlook for 2021 is right now the party is still going. Okay, so I'll start another little spot here. So 2021 outlook. The party is still going, right? Some may be late, but better late than never. There is still continuation, there is still drifting, and there is still a very accommodative and incentivized environment. Let me see if I can spell that. Incentivized environment to trade and hold and continue investing. Okay? So, all that said, that is a good environment that we're in right now. Now, it may not be as growth friendly as it was in 2020. But what we are starting to notice is this transfer, and this usually works in cycles. We tend to see these, 7 to 10 year cycles of growth to value or value to growth. Going from the dot-com bubble in 2000, 2001, we went from growth into value, right? Like once all your tech stocks bursted, we saw value stocks actually gain over the course of 2001, 2002, 2003, up into 2007, 2008. And then we had our financial crisis, okay? But if you look at a value stock versus a growth stock, you'll actually see that the kind of recession-proof nature of a value stock and the ability to weather a storm is a lot better with, again, major blue chip companies, value-based stock, low volatility stocks, different sectors are going to outpace others depending on the environment. Now, we have produced certainly a lot more bubbles and extremes, and I think that's what we're looking at right now. Is when you see in the background that I have the chart up for the SPY, which is the ETF that follows the S&P 500. Okay, right now 1 to 3% dips are being bought. Okay, the Nasdaq, if you're following the Nasdaq, so you can follow the NAS 100, you can follow the QQQ. We experience a 12% correction from recent high to recent low. And right now it's stuck. So growth, right? Aggressive growth, tech stock, tech sector, all these companies like Tesla, Apple, Amazon, Microsoft, there's tons more that essentially, e-commerce like Wayfair, Peloton, Zillow, Zoom, all these stocks that last year just had like 3-digit gains, 3-digit growth. Right now they're stuck. They're stuck from the highs of last year to the current correction cycle we've seen in the first quarter of 2021. It doesn't mean that they're dead. It just means that we're not going to continue indefinitely. It means that right now there's a bit of a pause in the growth sector, and the Dow Jones, right? The old Dow Jones, or if you follow the diamonds, the DIA, which is the ETF, it is outpacing and outperforming the SPY and the QQQ. And I actually have the evidence of that right here. I was looking this morning. I have my little snack series here, my newsletter from this morning. I need to look at my, there it is, my morning brew stuff. Okay, so the year-to-date performance. Okay, here's year-to-date. just so we know. Let's see here. We have the NASDAQ. So the NASDAQ 100, or the NASDAQ, is up 2.54% on the year. So this is in 2021. So 2.54% positive. So let me go plus 2.54%. Okay, that's for right now. The S&P 500 is up 4.18% right now. The Dow is actually leading the way at 6.6. Okay, 6.6%. Now this is year to date. This is starting from January. Dow's up 6.6%, S&P up. So look, all three benchmarks, all three indices are positive. All right, but it's interesting how last year, if you look at the numbers last year, the NASDAQ was like a 40+% instrument, right? Even though we had a 40+% drop, we had a 60 to 70% rally. The Nasdaq finished the year nearly 40% off of the. Actually, no, I'm sorry. Finished the year like 40% positive after a crazy, volatile, massive swing. Okay, S&P, same thing, 30% to the downside, 40+% to the upside. Finished year like 13, 14% positive or 15% positive. Dow Jones, not nearly as volatile, but still had a 20 to 30% downside, got all the way back to those highs, and struggled to really claim those highs. But here we go. This is where I'm talking about this value stuff, this growth to value transition. So the Dow right now is outpacing. All right, if we're taking a look at the overall markets, this is important because if I lay this foundation, this is what we're probably going to see on the charts. If you're following the SPY, if you're following the Dow Jones, following the Qs, right now, every little dip we've seen, we have this low, this low, this low. We had a little dip last week. I think that right now the markets are so obsessed with the idea that they don't want to see anything fail. We don't want to see the markets really correct more so than these levels. Let me go ahead and mark this out on my charts. I don't think the markets really want to slide past this level. If the SPY were to break below these recent lows, let me go ahead and put a timestamp on these. So this recent low here in early March, we had a little scare in early March and it never broke below 370. We had an early scare here back in late January, early February. We didn't break below those levels. So that would be, I would go ahead and label that. That'd be my trouble zone. Okay, that would be my trouble zone. That'd be my correction area. And I would look for the SPY to essentially sell off anywhere from, let's say, 8 to 12%, maybe more, okay? But that'd be a trouble spot. If we take out those recent lows and we finally break the structure overall, I think we start to see some trouble brewing for the stock market overall. Okay, now I'm just going to simply drag a trend line from the low to the high. I could do the same thing with this recent low from September of last year and say, you know what, this is another trouble spot right there. If price does spend some time on the right-hand side of this blue line, again, it's going to be a trouble zone. Now, what I expect to see happening here is that the market will continue to, if we have a dip, we see the market bought. If we have a dip, we see the market bought. We have a dip, we see the market bought. And it will be this low, grindy drift to keep going higher. And there will be lots of opportunities out there to trade. There will be lots of opportunities to still get good prices on stocks you've been wanting to own or stocks that you own currently and you want to add to them. My transition from 2020 to 2021 as a stock investor was, I did participate in a lot of the COVID crash. Like once I started to see the dip, I was buying a lot of double bottoms. I was buying a lot of cup and handles. I was long and very much short-term long. Like I had a lot of 50% wins last year. I had a lot of 100% wins last year, which was completely what was I going to say? Unexpected, totally unexpected. But it was incredible. And so we had great profit levels to get back to. I wish I was still holding some of the levels that I bought stocks back in 2020. But the returns were so fast and so violent, I just had to take that cash and have it at the ready in case I could get better prices or in case, the recovery was not quite as, fruitful and easy and I would even say unrealistic as what it actually was. So I think that going higher in the stock market is probably right now the path of least resistance. All right. So I want to stay the course. I am still very much a short-term bullish trader in stocks overall. I am primarily looking only to buy stocks. Okay. I don't want to sell anything. I have no interest in trying to get the next big GameStop squeeze trade. I don't care about stuff like that. I want to buy and own stocks that I want to either invest in, cost average into, roll over dividends. That's my outlook. It's a lot different than 2020. 2020 was buy whatever the heck you can get your hands on and see what it does because it is so growth friendly right now and volatile, it was like everybody. And if you traded call options last year, you probably killed it. If anybody came into trading options for the first time last year, it was probably the best thing that you've ever done in your life. I mean, I have friends that have, I mean, they're up like hundreds and hundreds of percents on hundreds of thousands of dollars. I've had a couple of friends just in the first quarter have generated anywhere from $1.5 to $2 million cash for themselves. Incredible profits out there. And so, again, the environment is very much profit friendly. It's very much bullish friendly right now, and that tone is not necessarily changing. So I want, at the end of the day, to still focus on the technicals. I want to look at the charts, and this is what I see the SPY doing. Okay, unless the SPY, and listen to me closely, because if we break these trend lines, if we break these lows and we get into these trouble zones, the saying is the low tide sinks all ships. If the SPY is dropping, the Dow Jones is dropping, the NASDAQ is dropping, guess what? Everything's going to go with it. Okay, last year, the entire tech sector pretty much carried the market in general and kind of carried the optimism with it. And so a lot of things just started to move. When we got out of 2020 into 2021, it was like all the cheap stocks that were out there that didn't really budge a lot in 2020 started to move a lot this year. So it's like there's just so much money getting thrown at anything that's like cheap, decent metrics, has opportunity to grow, and it's still a very bullish friendly environment. So this is what I'm watching technically. The SPY will probably continue to churn these higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and this will go on for a while, right? In fact, we might end up stretching a little bit further into some topping levels. We might end up stretching until it's so ridiculously overbought. Look at a weekly chart. Look at a daily chart. If you have something as simple as a relative strength index, right? If you see a relative strength index that is overbought on a daily or weekly chart, it's worth taking note of. And maybe by the season, maybe it's the end of May. Maybe we get through May and June and we kind of coast through the summer and we have a really rocky, volatile fall coming in stocks, right? But the point is, we're going to be ready for it. So whether you do trade stocks or don't trade stocks, but you want to learn, if you want to enhance your stock trading and have strategies, especially with options, to collect weekly income, to collect monthly income, this is what Tyson and I are going to be doing a lot more of in the coming weeks. So I'm excited to be trading with him. Tyson probably, I mean, I know a lot of great stocks and options traders. Tyson can probably work circles around many of them. And my job is to make sure that we keep it very simple to follow and very like novice to advanced. All lessons and all traders are welcome. So you'll see more about this in the coming weeks. But watch the charts, the SPY. I think this is how we're going to continue to kind of grind higher. Now, if we see, and I don't know if I can get a symbol up here, but I will show it really quickly. How many of you have heard me in the last probably month? Maybe it's in my Flex trading room. Maybe it's on my YouTube channel. How many of you have heard me say something about the 10-year Treasury note? I don't know if I have the symbol right here. I do not. So let me bring it up really quickly. I have it right here. So let me go TNX. The 10-year Treasury note. This has been getting a lot of attention out there. Okay. The 10-year Treasury note is at 1.68%. Now, the reason this is important is because this is going to be a factor with how the stock market is probably going to react in the short term. Now, again, this is my opinion. I think that if stocks are to continue, gotta spell continue right, continue to grind higher, the TNX needs to stall, slow down, and even retreat from recent highs. I think that is a really important thing because last week, Jerome Powell had a press conference with the FOMC. Last week, Jerome Powell tried to reassure the markets the Fed is not going to do anything to interest rates until 2023, and they're going to continue to stay very, very accommodative, and they're going to still look at their employment numbers, still look at their inflation numbers, and not be overall concerned that inflation is running hot right now, not be overall concerned that they're going to overheat the economy. And so the Fed is still very accommodative. And despite the market's assurance on Wednesday, Thursday and Friday turned right around and sold off, right? And we saw it in the currency world as well. If you're following Forex, we saw JPYs get weaker on Wednesday, dollar get weaker on Wednesday, and then Thursday, Friday, literally 48 hours of nonstop dollar strength, yen strength, and Swiss strength. Okay, so it was a short-term play in the Forex world. We had some risk-off flows, and I think that if stocks are going to continue to push higher, they need to see this 10-year yield drop or settle back down. Now, I've told traders this in my room. I think that the 10-year note could continue. Again, path of least resistance, momentum is strong. Okay, the force is strong with this one. I'm fresh off a Mandalorian, so I can say that. If we see this continue to churn higher, there is a yearly target right there, just above 2%. Okay, just above 2%. Now, if we get there, that is going to put some strain on the growth opportunities in the stock market. And again, like I said, you can have the best stock, you can have the best intentions, and you'll still see the best stock in the world, whatever that is. You'll see it drop if the markets are going to drop overall. Okay, if you want to look at some evidence like that, then you can simply look at a screener or heat map. How many of you have seen something like this before? There is a website, finviz.com, and there is this really nice screener, this little heat map. And, look, when the overall markets are down, this entire thing will be flashing red. Okay? So if you're wondering, right now we obviously have some growth out there. Microsoft, Apple, Amazon. That's actually pretty interesting. We're starting to see some of the big blue chips, the big tech stocks from last year are leading the charge. Now, if we go back to last week, let me actually go to let's go to the last week. Okay? In the last week, this goes back to last Monday to present. Microsoft is still down from last week to this week. Apple's still down. Google's still down. Amazon's still down. Tesla still down. Even though Tesla's up a lot today. Tesla's actually had a big change today. If we go to the one-day performance, you'll see right here that Tesla's up 6.21% just on today. Okay, so if you look at the last week or the last month, check this out. Microsoft for the last month, 5.51% in the red. Apple, 7.5% off the highs. Or the last month, we've been 7.5% down. Google down. Amazon down. These were all the big names from last year. Tesla down 16.8% in the last month. So even though it's up 6% for the day, it's still down 17% in the last month, right? So this heat map is really nice for an at-a-glance look at what's the overall market doing, okay? And you can also see that this breaks down by sector. So you have technology, communication services, cyclicals, you'll have healthcare, defensive, financials, industrials. Again, it's just a nice at-a-glance heat map to see what's happening. But I promise you, if the stock market is selling off as a whole, most of this, if not all of this, will be entirely red. Okay? And so it doesn't matter what your greatest stock is ever. Okay? If you believe that Tesla is going to go to $3,000 like Kathy would at ARK Investments, guess what's going to happen? Okay? It's going to get there at some point. I would assume that give it 5 years, 10 years, Tesla will probably continue to run. But in the short term, what we might experience with Tesla is, let me go to the stock right here. What you might experience with Tesla first is we might have to see Tesla start to go through some accumulation phase. Well, let me make sure that my stream is going pretty well. Okay, we're good on the stream. Okay. If you're experiencing any issues or buffering with the YouTube channel, you can always go from the 1080 quality to maybe like a 720 or whatever the lower volume tiers are. So if you're experiencing any buffering or you're losing me at all, you can offset those settings by going down to a different quality, and I'll just keep talking. But we should just still have a healthy stream running. Okay. What I was going to say is this: we could be looking at some accumulation phases. So looking at something like this, TSLA. Accumulation zone. I think that there's going to be an incredible amount of interest in Tesla if we come back to around, this previous low is around $530, okay, or maybe it was lower than that. But I think if we get, let's say between like $520 and $400. Now, again, we have this big low right here, and we have this high. So there's a massive swing, and I know a lot of traders are familiar, especially following market traders. You should be familiar with Fibonacci's, right? So if I take a Fibonacci right here, and I just simply follow this low to this high, it would make sense to me that there are not only retail traders excited for levels to buy Tesla, but also massive funds and massive institutions, right? And massive multinationals that place trades just like you and I do. They just do it with, bottomless pockets for the most part. So look at these Fibonacci levels. If we come back to this low, this recent low, I'll move this over here. If we come back to this recent low, it just so happens that was right at a 38% fib level. And I will try to get this as spot on as I had it. Yeah, that's about right. Okay. So right there. So right at the 38%, there was a really nice reaction to that, okay? But could we come in and start to look at accumulation where this is a high to low. This is the market that's going to, maybe work its way back up a little bit and try to regain those highs, or perhaps we end up having this is a correction. We struggle to make new highs and the market heads down into another corrective cycle. So we have this swing to the upside. We have this low to high, right? Everybody follow me? And then we have an A, B, C, D swing to the downside. And look, price wise, from around 500, I'll even say 550. From $550 to $400, I am incredibly interested at getting more positions in on Tesla. And am I ready for? Sure. If I'm ready, I'm ready for more. If Tesla ends up dropping back down to $300 or back down to $200 after a 5-to-1 split, I will still buy Tesla. What's going to be interesting is if it comes down to those lows and we have, from $100 to nearly $1,000 and we wipe 80 to 90% of that away, they're going to start drawing conclusions to Bitcoin did the same thing. They're going to start talking about how volatile and how unsafe Tesla actually is. But look, I think the reality is that this is a technological disruptor in the automaker industry. The research and advancements that Tesla is making in the industry probably outpace any competitor, but they may not be able to compete with the costing of their technology. They may not compete with the scope that other automakers can do. But again, I don't think Tesla's looking to compete like that. I think Tesla's going to be, they're going to be like the trailblazer for what changes the industry. And I think because of that, it's going to be a welcome stock. So look, I would be lucky. I think I'd be lucky to be able to buy Tesla at $500. And I'm saying that from a trader that owned it before they went to a 5-to-1 split, that owned it at $200, that owned it at $500, and have taken some pretty good runs on Tesla. But now that I can see this structure setting in, if we get a chance to buy this at the yearly pivot, I would happily hold on to new highs. We're talking about a 5-year outlook of $2,500 to $3,000. If you are in at $500 and you're looking for a 5 to 6 times reward, why would we not take that trade? Right? So, and that's one of many. And so I've been saying this on my YouTube channel for a while, and I think it's important. If you have the ability to see targets on your charts, if you have the ability to use pivots on your charts, look at the yearly pivots on all these fantastic levels. Okay, look at Zoom. Okay, Zoom, right? Everyone started doing Zoom conference calls. Everyone started working from home. Zoom went from $60 to $600, and look at what's happened. We are right back at the halfway point. Now, do I think that Zoom is a company that's going to be thousands of dollars in the near future? I don't know. I didn't think it was going to be a $600 stock last year. So I'm not really going to chase Zoom because I think there's going to be, adaptations by Microsoft, adaptations by Apple. I think there's going to be other teleconferencing things that connect people. And if, we have a vaccine and people can get it, guess what? We're going to start normalizing work once again. And this work from home is going to start going back into in real life, right? You see WFH, that's working from home, IRL, that's in real life. That's going to be the new shift into 2021. Eventually, people will go back to work. Whether you really believe you have to or not, you're probably more productive in an office, in a work setting versus home with distractions. I will say that I've been fortunate to work from home for the last, 10 to 12 years. I don't want to go back to an office. If I don't have to go back to an office, I don't want to go back to an office ever. This is my office. I'm plenty productive. I probably am on my computer more in this one room, 8 to 10 to 12 hours of my day. This is what I do. So anyway, just stuff, right? Narrative, commentary, that's what we're talking about. But this yearly pivot, this is what a lot of big stocks are going to look to find. Here's Microsoft. Okay, Microsoft is at $236. How many traders out there would love to own Microsoft at $196? If we had a 40% drop, or I'm not sorry, 40%, let's look at the dollar amount. If we drop $40, okay, if we drop $40, we're talking about almost 40% off the highs. I love it. I would love to see that type of decline to get this on sale. Look at your structure. We have past resistance becoming future support. We've got all these previous lows from last year in September, October, a nice yearly target right there. If you drag a fib from this low to this high, or even this low to this high, you're just looking at Fibonacci numbers to start looking at accumulation levels. Okay, so I've said this before. I'll say it again. Great stocks that you want to own. there are great levels to be forecasted. I have a lot of limit buys in my portfolio right now. A lot of levels I hope price can come back and find. And I've had to re-up those limit buys every 60 days because that's what most brokers do is they'll give you a 60-day good till canceled, right? For stockbrokers, they'll give you GTC of 60 days. So I have to re-up those. If they're not filled, I re-up it. And this is one of them. I'm in Microsoft for several $1,000s, but I'm looking at levels to add more. Okay, I would like to buy the ETFs, the simple SPY. I would love to buy the ETF, but not at current prices. I'd like to buy Vanguard funds, but not at current prices. I mean, I need to see corrections. So long story short, go back to the charts, right? Go back to the charts. SPY. Okay, go back to the SPY. Does everybody see what we're talking about here? I mean, we can keep grinding higher. Go to the DIA. That's the Dow Jones. This one has, like I said, outperformed. Okay? But the trouble area on the Dow, the trouble area for this DIA would be if and when we start getting, okay, we struggle to make these highs, we start breaking these areas, and I think we quickly drop into those September, October levels from last year. That's the trouble. Now remember, there's a difference between correction and bear market. I'll leave you with this. I'm going to wrap up the session here in about 5 minutes. If you have any questions, let me know. Okay, but correction, we're talking about 10%. Okay, 10%. Now, technically, we have a bear market at 20%. So we have a buffer of 10 to 19.999% is correction territory. Okay, so that's a pretty wide net to think about. We could have a downward move in the stock market overall, have money sitting on the sidelines waiting for buy levels. I would not be surprised to see a big reaction on any major index, all right, at 10%. Any major index at 10 to 15%. If we tap that 20%, rather than letting the bear market actually be confirmed, we would probably see a tremendous amount of interest to buy it. Okay, so I'm just throwing it out there. If we see levels like this, I'm pretty interested in, again, using good equity management, but cost averaging in to some correction levels, all right? But also having the ability to profit from higher volatility, have the ability to be in stocks and build a portfolio that I know that, you know what, if I'm able to, let's say that then the markets go sideways, I want to have option strategies to make daily, weekly, monthly income. Maybe my stocks I have to hold. Maybe I don't have the type of growth we had in 2020, so we can trade options to generate those returns, right? We can sell calls, we can sell puts, we can collect premiums on those so we actually get some income. We can have directionally neutral strategies. If the markets are sideways, we can play directionally neutral strategies and get profits from that. That's a good thing. Okay? All right. So lots of ways we can look at the markets. Overall, I still remain bullish in the short term. The market's not telling us anything otherwise. So if we go lastly here to the QQQ, that's the NASDAQ. Okay, this one has broken some recent structure. Now, I said this morning in my morning session for my YouTube channel. If we break these highs, I think the NASDAQ is going to run back up and challenge this high. It doesn't mean we're going to new highs. All it means is that this was our 12% correction. This was our 13 to 14% correction back up. And this is just getting back to the highs. I wouldn't be surprised if the NASDAQ ends up going sideways with somewhere between a 10 to 15% range. Okay, the range lows are protected. The range highs are protected. This is a time that we have to get creative with our strategies. This is a time that we either consider accumulating more levels at lows and we consider taking some profits and generating some income here at range levels, or we simply wait for this to be a breakout and trade higher or a breakout and trade lower. And we just have to be prepared for what price gives us. If price gives us a lot of sideways movement, we have to be able to generate profits in that environment. And the same thing is true as a Forex trader. How many times in Forex do we see the markets go up and trend really aggressively, down and trend really aggressively, or sometimes the markets do absolutely nothing? Now, you can either not trade this environment, not trade this environment, not trade this environment, or you can have the ability to trade the trend, recognize that the trend cycles are done, and start dealing with consolidation to still make profits. It's the same way across every financial asset class we trade. If you trade stocks, if you trade Forex, if you trade futures, if you trade cryptocurrencies, the market's going to do whatever it wants to do. It's going to go up, down, or sideways. It does it fast, it does it slow. but it's our job to recognize what the markets are doing and tailor the strategies, the best possible strategies, to that environment that we can make the most amount of money. And hopefully do it consistently, hopefully do it with high probabilities, do it with confidence, and continue to work. Like that's what traders do. That's what we work for. Okay? Does anybody have any questions for me? I know that was a lot of commentary today, but I'm hoping that I can provide at least an outlook for why the markets are not really dropping, why you might read things about why we're going to see a bubble, we're going to see this. Look, until it's very obvious, I think the market's going to do everything in their power to keep fighting. I think the market's going to do everything they can do to stay on this bullish track. Okay? And it may not be as aggressive as 2020, and the yields and returns and the crazy volatility from last year might not be seen at all this year, but there will still be good opportunities out there, right? And so if we have to take a step back and be a little bit more patient, maybe have more of a 3, 6, 12-month horizon, I think that's going to be a good thing for us as stock traders, okay? I think if we have the ability to learn, if you want to learn from Tyson and I, you want to talk about, finding stocks, trading options to collect those premiums, to collect that daily, weekly, monthly income. And again, wins and losses will happen in trading, but our ability to control our losses, okay, risk less, make more, control our losses, that's the most important thing, right? And so at the end of the day, we have our chunk of wins, we have our chunk of inevitable losses, and at the end of the day, as long as our wins exceed, as long as our wins are more in dollars, we're walking away with profits, and that's what good traders do. Okay? All right, traders, if you have any questions, let us know. Again, because this is a YouTube channel for the fancy YouTube algorithm, we do one thing for me, and please hit that thumbs up button for us. If you are not subscribed to the channel, now is the time to do it. Subscribe to the channel, click the notification bell, so that way when we do go live for sessions like this, whether it's just me like today, or we have Tyson and Gary, Tad, Tion, myself, our entire team here at Market Traders, click that notification bell so that way when we go live, you are alerted, you can join us live, engage with us and ask us questions, trade with us every single week. Okay? All right, traders, that's it. Have a fantastic Monday, and I hope this helps. And happy trading, lots of profits. We'll talk to you all very, very soon. Take care. Bye-bye.